Hey folks, this is Marsilio, and thanks for your interest in my take in the markets, where we combine timing and technicals for the win. Two things Wall Street hates the most because they work the best. So here we go. First, quick review. Last week, I expected weaker, especially for indexes, weaker Monday, Tuesday, recovery, quiet profit taking into month end. Pretty much how it played out on the S. And I'm going to point out that the low of the week on S&P futures, ES, was right on the weekly pivot. So that is exactly what I mean when I say combining technicals and timing. Timing thought Monday and Tuesday were a bit weaker, but still it's an uptrend. And look, that was the low right on Tuesday afternoon, bought, perfect buy, and then recovery, and then a little bit quieter. That said, the ideas that I had as of the last week video, I thought large cap tech was going to do better. That did not play out. But midweek, I shifted gears and noted that commodities were both looking good. I highlighted oil and gold in the morning quick take note that I've been doing. And that was early Wednesday. And these were the best moves of the week as oil really took off. And here it is on gold, a massive breakout. So that was really the best. These were the three best, buying the weekly pivot on the ES. Russell also moved well, but getting into commodities, even though they've already had big moves, if you're a short-term trader, those are the best things you could have done last week. So not too bad. Another audible on the fly call, my morning quick take, which you're still getting regularly. May not be the case forever, so catch it while it's available. And then on cryptos, I thought there was going to be a sideways choppy range, and that's actually how it's played out. Even this level that usually would be definitive has chopped a bit, 70K level, a little down, up, then a slight false break. Now we're up again. This is just looking like range-bound behavior, although bullish bias, but still range. So the levels I'm going to be watching are anywhere near the highs, especially the closing high level is around 73,000. Ethereum, not quite as strong on the retracement. Maybe it gets up to the top of the Bollinger Band. I'm not sure. It needs to stay above that 35.73 level. If you're interested in these levels, and I've shown over and over again how important they are across asset classes, I've mentioned a video a couple times. I will get that going. You'll be able to, it'll be an instructional video on how to set these up in TradingView. And the only difference that, I've also created a invite-only script that includes the half-year pivot. So it's just a minor tweak to the existing TradingView script. But I do find the half-year pivots in play. And actually, this is exactly what's in play on Ethereum and Bitcoin, are these half-year levels based on 6 months of price action. So I will be getting to that in the near future. All right, so that's the other thing I want to say is some of the intraday musings worked out pretty well. So if you're at all interested in short-term trading, we'll have time to do a full review of those, but before, be sure and check those out. Not always to the minute, sometimes to the minute, sometimes, within a few minutes. Pretty good take on things. Okay, so now let's look at some charts. Two levels remain of very important interest to indexes, and one is this Dow yearly R1. It's bang on it for the second time, and if that clears, that really mitigates any potential. It would be one of the factors that mitigate any potential bear threat for indexes. But if we have another rejection, that'll look a little bit worse because it'll be after a high test. So watching that level, in addition, new quarter, new month, we'll have new quarterly pivots, new monthly pivots. And then the other thing that's of note is that the NASDAQ, the futures yearly R1 equivalent, is also still the high of the year. And I was pointing that out when that was getting tested, that would be the level to watch. And NASDAQ has kind of drifted lower and looks weaker. I haven't calculated the new April pivots yet, but if there's any index it's likely to be below pivot, it's going to be tech. So just something to keep in mind ahead. And then the other thing I've mentioned that want to just point out that if there's a bear scenario, if it's time to really put on a hedging trade or puts or trim, usually VIX is going to confirm, and we're just not really seeing it. VIX, had a chance to move higher and then didn't, got abruptly smacked and down near the lows, not really on a level. And I also want to this is a falling 200 moving average, which I'm going to hide temporarily. And you can see the VIX turns were right on pivots. So of the quarter, that's quarterly level, and then the recent monthly level, of thin orange line, tested several times and acted as resistance. So VIX never really changed pivot status. One day up here, but that was top of the Bollinger Band and rejected by the quarterly pivot. So it's just VIX is, there were a couple days I thought VIX was sniffing out something, but then bull's back in charge. The other indexes I like to watch are the ETF versions, SVXY and VXX. And similarly, there's going to be a bearish, this is SVXY, so it's going up along with risk assets. This is going to be, if market's going to drop and we're going to see a bearish scenario, then this level, important level, would have acted as resistance and it would have gotten a big whack. Instead, it cleared it. And now, we'll see. I'll have the new monthly quarterly levels on Monday to check out. So this is some charts. Do want to look at the gold chart a little bit. So here's the jet. So that was I showed the other move on futures, but this is the daily chart view. Again, yearly R1. No selling, weak selling, weak selling. Often we see it's not just the level above or below. I'm looking for the reaction, whether it slows it down or there's some minor selling attempt or there's a big selling rejection, etc. It's the reaction to the level that matters. And then here's oil on the move, not quite new high territory, but I think this could keep going. I'll say more about that ahead. So let's see. The other thing that I can point out is the miners, which I mentioned, also clearing its yearly pivot, now above all pivots for the first time in, I guess it was back in December, but still this year we've got gold on the move helping out. So I mentioned that as a possible way to play this move in gold as well. Okay. So that's review, that's some charts. Now, in terms of summary for the coming week, I think that what my strongest conviction idea is the commodity rally continues. And basically, if you're a big institution, you don't really care about week to week, day to day, week to week, you're really month or quarter. Here is semiconductors looking possibly toppy and ripe for at least some sideways. And then here's gold blasting off, and RSI is not even touched overbought. And just major breakout going on in gold. I'm also combining the important timing factor here. And then oil, crude oil, I mean, nowhere near the highs, even on the continuous futures contract, and USO looks even worse. So this is just really starting to change trend status, and even there's just so much more room for this to rally if the commodities are going to be supported. So I think the theme is going to be, if we have a rebalancing idea, tech is slowing down. Other sector, which has led, this is a sector view of S&P from 2020. Tech, obviously, monster gains compared to everything else, but this is slowing down and some other things are playing catch up. And I think that's more likely than a big sudden drop in the market. At this point, I think it's rotation and commodities are leading. That's my highest conviction idea. The other idea is that I think we're going to see some sideways chop this week. And that means playing range may work out well. So what do I mean by that? Well, here's NASDAQ, for example, NASDAQ futures. You can see when the 4-hour RSI is getting up near 70, it's getting sold. It means pro sellers are coming in and selling the rallies. We haven't really seen RSI dip to the opposite, the 30, since that key low. Yes, if commodities rally, yes, it's going to be supported due to energy sector somewhat, and some it's not tech influence, but it, again, range bound activity, if I'm right. So looking to play the range, I think may be the best strategy, and you can do that on RSI and level combo, or if needed, the stochastic. Sometimes you'll get a stochastic extreme like this for the RSI, and sometimes that works, but it's really the combination of the levels plus the reversals that I like to see. So those are my two ideas for the coming week. Cryptos, I think the sideways range continues. I do not expect a power up, so similar but bullish bias. But I don't at this point, I don't think, at least on Bitcoin and Ethereum, in terms of the other, I see Dogecoin is moving once again. It's really well in this current period connected to Mercury, but I'm going to keep this Astro lingo free. In any case, since Bitcoin and Ethereum don't seem to be returning to power up move, and so you can just wait for a bullish scenario to play out. I think the main damage is done, and we'll see what happens after April 1st. Of all April 1st days in the market, we could have a quote unquote fool's rally, or I think a lot of people are expecting markets to go up on the first of the month, which they often do, new money coming into the market from 401k plans, et cetera. And if they're not moving much, then maybe we'll see more of a dump Tuesday, Wednesday. But if Monday opens strong, which it easily could, and there's a nice big pop, then the rest of the week is sideways. And I'm a little bit more bearish towards the end of the week and into early next week. So we'll just see which version is playing out and where to profit. If I'm right about the ranges, especially on the indexes, then buying the dips on the leaders, selling the rallies on the laggards is probably a good way to play and not really make a huge directional bet, except for the commodity trades, which I think are going to continue. Okay, so that's the summary. That's my best ideas. I'm going to take a look at some data edges for those who want to go into more detail. And I'm going to throw one out for the crypto fans first. One of the best data edges, this is just off the hook, is really quite simple. And this one is in play. I can go back to 2020. I just like to select April because the COVID crash was kind of unusual market event, more like an outlier. Or the start of the major bull market, November 2022. Notice I am selecting for Bitcoin bull markets only. But look at this difference. The difference in gains, just dividing moon cycle into two here, and one is waning, one is waxing. That simple. But when it's waning, 0.01, that's based on 15%, 15-minute average percent return, 0.001%. But on the, that's waxing. Waning is 0.007%. And so that is massive outperformance. Let's see, let me get in terms of ratio, more like 6 times the difference, just going from one half to the other. So that's in play now through April 8th, started in March. So that's another reason, just generally bullish bias. And now I'll go over a couple of edges that I mentioned last time for the index traders. So there's some mixed edges in play right now. I mean, that's often the case. Often the case, markets are mixed. But so it's my role to point out what these are when they're in play, how to take advantage of them, and what I think is the strongest. There continues to be an edge that would support a VIX pop, but until we see a signal, I'm not going to play it. And that continues to be in play through middle of the month. And so we may still yet see something. There's really no trigger, or not yet. And then there are a couple of bearish, very short-term edges in play this week. One is actually for the first, so I'll be curious to see if that plays out given the usual strength of the first of the month. And so what I mean by that, I'm measuring data from October 22 to current bull markets only. And when this condition is met, the returns have actually been negative, which is quite rare. I'm not showing this on the chart right now. It's just quite rare considering the bull market we've had since then. So that could be a dip to buy. It could be a kind of weakness that's surprising everyone, or maybe it just doesn't work. They're not always 100%. And then the same edge is in play on the 3rd. So both of these are for the session. So if you're watching those, the exact times will be in the quick take notes. So that gives a possible decline, weaker than expected Monday, perhaps for some of the morning, or maybe it gaps up and then goes sideways, something like that. It's easily possible. And then Wednesday, a little bit more bearish bias. Again, this is ES only, not really talking about the commodities. I think they have the best chance of a big move up. I am working on similar detail for Bitcoin, but this is what I've got right now on this simple moon half. But geez, look at that. And consistent in play from 2020, in play from 2022, in play from 2023. I mean, that's amazing. That it continues to just be a simple moon division that's capturing that much additional returns for the crypto traders. So I think that is going to do it. Thanks again. Thanks for your likes and subscribes on YouTube and Twitter. I really do appreciate it. And that's it. Good luck. Have a good week. All the best.